Hi, and welcome to Risk and Robots, where we decode the future of risk. My name is Max Eber. I'm one of the co-founders of Tactile and serve as the CPTO there. Today, I'm speaking to Jill Sheckman, who was the Global Chief Credit Officer at PayPal and previously served as a Chief Credit Officer at Amex. Jill is a highly commercial mindset and has deep expertise in all things risk, fraud, and credit, which is why we seek her advice on the most ambiguous and tough questions. We talked about how risk teams will operate in 5 years' time, the potential for AI to reshape the work from a control function into a growth enabler, and finally, about the things that need to happen to get us there. Let's get into it. Jill, you've worked in financial services for more than 3 decades. Hard to believe, but very impressive. One thing that everybody is wondering about is, with all this stuff happening in AI, what is your vision for how a risk team will operate in 5 years? I know it's a hard question, it's a big question, but it is the biggest question I think that is on people's mind. Would love to hear how you think about that arc of technology adoption.
Well, thanks for having me, Max. I'm super excited to talk about this topic because really in my, as you mentioned, 3 decades, this is probably one of the most transformative moments that I've seen in my career. And, AI is really fundamentally shifting risk from really a backwards looking function to real-time proactive business partner is how I think about it. So where do I think we're going to operate from a risk perspective in 5 years? I think we're going to operate very differently. I think the risk teams are going to really see a dramatic shift, and they're already seeing it. So real-time risk management. So risk teams are going to transition from monthly and sometimes quarterly views and batch to really live real-time insights. And you're already seeing that in many cases, but I think there are some particularly large institutions that are still transitioning. I would also say whether it's fraud or credit or compliance, analytics are just going to be continuously on and detecting and acting as soon as changes happen. I think the next change I see with AI is hyper personalized financial services. And I think this is like super exciting. So using AI, open banking, credit decisions will be tailored for each individual. So you're not going to have a table of for pricing or for limits. Really,
Mm.
each individual or business is going to have their own unique pricing and even product in some cases. So AI will also impact products, and you can really personalize product services and servicing based on individual needs on real-time behavior. And that will also help with inclusion without compromising risk. So think about today we exclude lots of individuals, but if you could really tailor products based on individual needs, you can certainly manage the risk and offer a broader set of products. The next change I would say is around, and this is a big one, I would say explainable and accountable AI. So I think this is where a lot of institutions sort of get tripped up on how they leverage AI, particularly as it relates to credit risk, and as regulations sort of tighten, really both in the US and in Europe and across the globe, you're not going to have an option related to explainability. You're really going to have to develop tools that are going to be able to deliver transparent, bias-aware, regulator-friendly outputs. And I think actually AI helps with that.
There's a lot to unpack there.
Yes.
I'd love to double click on this point you made about inclusion and better underwriting, because I think the narrative around AI is often quite negative and all the risks and how the robots are taking over, etc. But I think one thing that we should not forget is it's a way of reducing risk because you just look at more data faster, more often, etc. And it's a way to better underwrite, which ultimately helps people get credit and helps small businesses get credit, and is fuel for the economy. Can you talk to us a bit about that part? Have you seen this before play out as well? Of how did innovations in risk management affect access to credit?
Yeah, I mean, in many ways, it can improve, right? So using single data points versus multiple data points, right? So non-traditional data, historically, financial institutions relied heavily on very traditional credit data, which only maybe told one part of the picture. I see this a tremendous amount in businesses, right? So when we used to use financial statements, it was very backward looking, right? It took a view of prior years. And when you use real time bank data, you're able to get a real view of how revenue is trending, what expenses look like, any injection of capital from investors. So it really helps from an inclusion. And I would say that's probably true on the consumer side as well. If you think about getting data from employers and understanding employment, understanding, if you're a gig worker and how much money you've made this year versus prior year. So, like, it really does, using more data and using AI to really help understand the risk, can create new products and can really be much more inclusive.
One thing that went on in my head as you talked about going more and more real time is I had to remember all the data infrastructure and the legacy systems that I've seen in various places that I've gotten to know over my few years working in this industry. And one thing is AI, but there's another thing which is data infrastructure, and they really go together, I think. So where do you think people stand in respect to the data infrastructure? Who's done a great job, and what would you recommend people do
Yeah.
um, to really harvest the gains from AI as well?
Yeah, I think data for sure is the foundation, right? And it's often the biggest barrier. So I worked with a major financial institution that was really trying to, build models, assess credit risk, assess fraud risk, and they had five different legacy platforms, right? Each system gave a slightly different view. Teams spent more time reconciling data than analyzing the data, right? The models were slow, insights were fragmented, and decisions got delayed. And by the time those models got launched and into production, it was, months and months and months, and
Mm.
in one case, a year, which was, the model was already outdated by the time it launched. So I would say, the turning point came when they rebuilt their tech stack, right? You have to think about building a unified data infrastructure or architecture, which is centralized and standardized, really across the organization. Having five different disparate systems with different data, sometimes the same data in a slightly different format, is not helpful. I think data governance is key. Clear ownership of that data, access control, and audit trails, all super important. And then I would say the last thing is, that I learned and we learned as an organization was, it's hard. It's really hard, and you need to lean on partners, right? One, it can help manage costs. Two, they have more expertise than you might have, or can actually do it a lot sooner than you sort of build up that expertise, and they just get you value a lot quicker. So I think the partnership model, every organization has to go through that, evaluation of whether you partner, whether you buy, whether you build.
Speaking of partners, so if you were to start a company today, and you were in the business of lending, what are some data sources externally that you'd be excited to try? How would you set that up?
I mean, there's so many data sources out there, and, like, just as a risk manager, I'm super data hungry. So a lending business, I think, there's the traditional data sources, but there's lots of non-traditional data sources. There's bank data, there's payroll data, there's credit bureau data for sure, but there's, digital footprint information. So I think there's, a ton of data to be explored out there. It's just a matter of, finding the right partners and then figuring out how to best leverage it, as we talked about earlier.
Yeah. You said one thing earlier which caught my interest, which is risk is really an enabler for growth.
Mhm.
So often risk is more portrayed internally as the people saying no. But this is the opposite, which is the people saying yes. So in this image of you starting your own company, how would you set up risk and the interaction with marketing and growth? Because
Yeah.
in the end, they're trying to do the same thing.
100%. And, in the organizations that I've worked in, the partnership is critical, right? And so I see risk as a strong enabler of growth, and the partnership with marketing, with product, with engineering is critical, right? Making sure, again, you have the right tools, data, infrastructure in place to be able to support business growth. And also automation, right? So you think about, servicing as an example, or customer management, right? When someone calls in for a line increase, right? That could be a customer service function, and risk sort of makes the decision. But think about a way that you can do that much more dynamically through, chatbots or and through AI. Also, on the other side, if there's customer has a hardship, right? Making sure that you can leverage, again, AI to dynamically improve collections, set people up on payment plans. All of this will reduce risk, but also enable growth, and it frees up capital, right, for the organization, right? If you get that right. And I also think, think about fraud. It's very similar. You can detect patterns, right? Reduce false positives, enable more spend, reduce customer friction, all aim to help protect revenue, build trust with customers, which again are all things that are important from a growth enabler perspective. And AI, like we just talked about, it can expand access to credit while maintaining control. So think about thin files, non-traditional borrowers. Again, partnering with, product marketing, you could think about products that are right for the right segments and right customers, and working with the right teams within an organization to develop the right products to support those different customer segments while really minimizing risk overall.
I love that. And yeah, I always think of these teams as really they are product teams and they are part of the product. I mean, this is the risk posture is the product in a way.
It is.
Um,
Exactly. And I always say, like, we all share the same objectives within an organization. Risk is really just there to help support and enable and protect. And so I think as much as people think of it as a control function, I really think of it as a growth function as well, because at the end of the day, if you're able to do it right, it's going to result in the right outcomes for the organization.
Wonderful. So one of the barriers we see with customers when it comes to AI adoption is just worry about regulation and regulatory hurdles. How do you think about that? I mean, no, what can be done today given the regulatory environment, but also how do you think it'll evolve?
Yeah, absolutely. I think, the most forward-looking companies are really using AI to get ahead of compliance, not just to respond to it. There's a number of different ways to think about it. One is, from a regulatory perspective, there's model transparency and explainability, right? I think you can use AI to help you identify model reason codes, right? And help with explainability, right? So AI could generate those model reason codes. Obviously, you need to have a human review it, but it dramatically simplifies the process related to explainability. So being able to make sure that you're transparent with your AI models, but also thinking about explainability for models, testing for fairness, providing regulators with detailed audit trails that demonstrate that you have control is super important. And then you think about operational risk. So AI can also, help understand any breakdowns, particularly if there's things that are, regulatory related, whether it be sending letters to customers or communicating reasons or declines or applications, whatever it is, AI can help you identify any breakdowns that are happening before they turn into huge problems. So think about companies that may have these consent orders because they had maybe either broken processes or that didn't realize it. So this can turn compliance and sort of regulatory oversight or second line into like a real time capability, not just a reactive burden. And it also, again, being able to demonstrate to regulators that you have these audit trails, you have real time reporting, and you can show this sort of consistently really does help reduce some of the regulatory burdens. And so, yes, AI isn't just, a risk to be managed, right? So it's definitely a risk to be managed, but it's becoming an asset in how we manage risk itself.
I love that. And I also think that at some point the regulators should push for AI adoption for a certain kind, right? Maybe not the irresponsible or crazy kind, but
Right.
we will find extremely, and we have already found, but we will find more extremely useful use cases that we think it'll be irresponsible not to adopt AI once we figure out how to really do it.
Yeah,
Um,
100%.
Really cool. You think AI for banking is disruptive as an innovation in that it favors the fintechs, or you think it's more sustaining in that it favors the established companies because they have all the data?
I think it's both. And I do think at some point in time that there will be some more data sharing, more than you even think today. I think AI potentially may make some of those non-competitive, like fraud, may be able to help federate some data in a very responsible way. But just to get back to your question, I think fintechs have the advantage of not having legacy platforms to sort of deal with, right? So they're able to start from scratch and build a robust infrastructure. What they need is scale. Legacy companies obviously have the data architecture, but they have the data. So I also see lots of partnerships. You see that happening now between both the fintechs and legacy banking partners. So I would say everybody wins, if that's an answer.
On your 5-year vision, like what is any missing pieces or final thoughts? Like we've talked about data, we've talked about the models, we've talked about the regulator. Or anything that's missing for that to actually pan out?
Yeah, I think probably the last piece of the puzzle for me is really around people and culture. This is not something that's necessarily new. So I've been sort of evangelizing like risk-based culture for a long time. But I think AI is really powerful, but it's only as effective as the people that build it, right? And that govern it and that apply it. So there's a growing need for talent that really can blend that technical fluency with judgment, right? Because, again, we move away from manual, but there needs to be experts that really understand modeling, that understand data pipelines, governance, responsible AI. And I think data scientists that really also understand sort of regulation, economics, customer behavior. So, what does that mean? I think it means upskilling teams, getting everybody comfortable with where we're headed, hiring cross-functional talent, not just people that are strictly data scientists, but people that really understand the business and can interpret the business and strategy. And then creating a culture, again, where risk is not just a gatekeeper, right? And they're not just viewed as a gatekeeper, but really a strategic enabler of growth. Ultimately, AI is going to change what's possible, but people and the mindset is really what's going to sort of get us there. And so I think, it's a time also for risk teams to sort of lean into this moment and really help to really drive sort of this strategic opportunity and growth across the organization.
Wonderful. Jill, thank you so much. That was terrific.
Thank you for having me. This was great.
Thanks for joining us on Risk and Robots. To find out more about the future of risk, follow me on LinkedIn under Maximilian Eber. And to learn about how Tactile is powering next generation risk decisions, go to tactile.com, TAKTILE.com.